sector says Europe. Oh, sorry. Thank you for joining today's session. Crypto and blockchain are growing very fast. A new report from Chainalysis, a global actor in this sector, says Europe is still the biggest crypto economy in the world. In 2024, it made up almost 30% of global crypto transactions. But as the market grows, risks also growing. In 2024, more than $4.7 billion were lost because of hacks, scams, and security problems. This is 33% more than last year. It's very important. These numbers show us a big problem. Many crypto companies do not have enough robust, strong risk management functions. And today I will talk about how crypto companies, also called CAPs, can build a strong risk management system that follows these rules and protects their business. Yes. And today I am here on the behalf of CFE. At CFE, we're all about helping organizations get better at what they do, especially when it comes to audits, training, and certifications. We're accredited by big names like UK's IAS and Turkak, and we work with clients across different countries. We're also proud members of respected institutions like you see on the map, CPT Certification Service, Association of British Certification Bodies, the UK Cyber Security Council, and Corporate Risk Management Association. And yes, this is me. Before we begin, let me quickly introduce myself. My name is Gökhan Polat. I am a risk management and digital trust expert working mainly in the areas of blockchain, AI, and risk management security domains. Today, I am with you as a CFP tutor. However, I have other roles too, founder of a consultancy company, Clever.io, and business development leader of FinTech Istanbul. I've been helping companies in these roles, especially in the FinTech and Web3, build strong risk and compliance programs. I'm also a trainer and advisor working with organizations like ISACA, IE Turkey, and CSA. And I regularly speak at international conferences about this topic. And I guess in the November, I will be in London for the ISACA Digital Trust event, European Digital Trust event. And I will again speak about how we can increase digital trust ecosystem in the custody services. And in this session, I'll share my insights on how to set up a risk management framework for crypto asset service providers in the line with MiCA and DORA, especially DORA regulations. And now let's get started. This will my agenda. It's a high-level agenda. First, we'll dive into the crypto landscape, the pain points, the financial situation of crypto ecosystem in global financial economy, and then we'll go to understand DORA facts and MiCA, DORA and MiCA cooperation in creating digital trust environment, and then we'll discuss about how can we create a strong formula for effective, robust risk management for CAS. Before we start, I also want to ask you a question. Do you have any professional experience working in the cryptocurrency sector? Feel free to drop a quick yes or no in the chat. I will check them. Or just think about it for yourself. I ask this because understanding your background helps frame our next step, defining the scope of a risk management program. If you're already working in the crypto space, you may know that the complexity and fast pace of these environments is huge. And if you're just entering the space, don't worry, we'll break it down together in this session. Let me check, is there anyone? No. Okay. Crypto landscape. Let's now take a step back and look at that picture, big picture. Let me ask you another question. Have you heard the story of the three little pigs and the big bad wolf? I guess most of us have. We are now 5 persons in this session. I hope there are more people in the YouTube channel, but we will also publish this in YouTube channel. So I would love to hear people about this story. A quick version now. After their mother left them alone, these 3 little pigs, one pig builds a house of straw, another with sticks, and the last one uses bricks. The big bad wolf easily blows down the first 2, but he can't destroy the strong brick house. And this is the scene where I was telling this story at event I organized during my position at Ernst & Young Turkey as a risk services business development leader. Now think about this in the context of the crypto world. Attackers are the bad wolves. So if you build with bricks, strong governance, proper risk treatment, you are protected. But if your systems are made of straw or sticks, sorry for my mispronunciation, with big security or no risk controls, you are vulnerable. Now let's check the statistic from the sector. Let's drink. Speaking English always make me thirsty. I don't know the reason, but according to Chainalysis 2025 crypto crime report, $40 billion in crypto went to known illicit addresses in 2024. By the way, please do not hesitate to scan this QR code. I would love you to scan it so you can reach the sources I used for the creation of this presentation. They will provide you a lot of understanding about this topic deeply. Even if this is only 0.14% of all crypto transactions, the impact is still big because one single breach also can damage whole trust against 2 sectors, not individual companies. It also affects individual people's trust to ecosystem too. But there's something important. This number only includes what we can confirm, like stolen funds from checks or transfers to address already flagged as illegal. It does not include crimes we haven't identified yet, or market manipulation or fraud that hasn't gone through the courts. So the real risk is maybe even larger than it looks. And I'll share another statistic with you from that documentation. I love to use this kind of report in my presentation rather than speaking about some new information. But with the statistics, it is easy to explain the problem. And here we are seeing the major risk items in high level of crypto. The major risks in the crypto world are not just technical, as you see. There are real challenges impacting investors, companies, and the entire ecosystem. First, the market volatility makes planning and risk management difficult with rapid price swings. Secondly, the regulatory landscape is quickly evolving with new EU rules like MiCA and DORA demanding rapid adaptation. And nowadays in Turkey, for example, there is a new regulation for crypto world, and they affect these companies dramatically. Then there is a privacy problem. We are balancing user protection with government transparency is challenging. We are implementing a lot of KYC and AML rules for the companies, and it enforces us to collect a lot of personal data, but we have GDPR, we have KVKK, Turkish Privacy Act. This creates a problem, stress for the companies. They should collect a lot of privacy data to be comply with KYC, AML onboarding processes, but it creates new opportunities for data leakage. And companies also face strict compliance obligations. Failure to follow these rules risk fines and worse. Finally, scams, fraud, and phishing have become smarter and harder to detect. As you see, we see the rates going and high and down in years, but nowadays you can see here in the half of the 2025 we experiencing a huge number of cyber attacks, successful cyber attacks in the system. And these are just some of the major crypto incidents. In May, $220 million was lost on Citus and Coinbase, face a $400 million loss in just one day. In February, I'm sure you already heard about it, Bybit experienced the biggest hit, over $1.4 billion gone. These are extremely important hacks, and we are seeing the number of hacks are increasing. We cannot, I guess, hackers learn much better than us. And again, you can scan this link and learn more about this. This CCN, a good source of cybersecurity problems and hacks in crypto world. And second survey. We've just seen how wild the crypto space can be. Hacks, fraud, volatility. So now let's flip the question. Would you want to be part of this ecosystem? As a risk expert, how do you feel about the crypto sector as part of your career journey? Take a second to reflect. No thanks to risky, challenging but interesting, exciting, lots of opportunities. Please make your choice. Then I am wondering about it because I am also creating new content according to these survey results. Now moving on. Now we'll dive into some Dora facts. By the way, please scan it. It is also the content I'm creating every week in the LinkedIn newsletter. I am creating content to explain the digital trust dynamics for Web3 companies. As you know, digital trust ecosystem framework is the latest product of ISACA. It's very important, and it helps companies to create a strong, trusted environment between their clients, partners, and all stakeholders. And now, as a risk expert, digital trust experts, I am applying this approach for the blockchain companies or Web3 companies. If you have an interest in these topics, please click and don't forget to register to my LinkedIn newsletter. Now let's talk about who's in the DORA spotlight. DORA is just another regulation for banks. Its radius is wide and growing. It applies to almost all EU financial entities, including banks, insurers, reinsurers, brokers, payment and e-money institutions, investment firms, and yes, even crypto asset service provider, CATs. That last one is especially important. If you're in the crypto or Web3 space, you are no longer outside the regulatory sheet. DORA brings uniform digital resilience requirements to all of these entities, ensuring to no weak link in the financial chain. And so DORA has 6 main parts of digital strength. It's a very long legislation documentation. I already read DORA and MiCA, but it takes time. So I summarize whole system in 5 components. You can take the photo of the screen. And first, ICC risk management. Risk means, this means we need to build a strong plan. We need to clear rules. People must know their jobs and need risk plans and a digital way to work. All our systems must be ready. Next is on the right side is ICT incident management. If something bad happens, we must manage it. So we need a process what to do. Also, we must put incidents into groups and tell the regulatory quickly. For crypto, this is very important. If you are slow, you have a big problems. Third, digital operation resilience testing. This part is about testing our computer systems, information systems. We must test often. We test our tools. We do hacker tests, penetration tests. For some big companies, we do a real hacker attack test called TLPT. Dora also says the people who test must be talented, not an ordinary one to implement this kind of sophisticated and technical test. Fourth one, managing ICT third-party risk and third-party management. Today, we use many other companies in our organizations because it is the reality of modern business side. You shouldn't be professional in all aspects of business life. Some guys in the business life are very capable in cybersecurity, very capable in AI governance, data management, or legal issues, legal departments, or human resources. We are now hiring them and work together. And Dora says, for this, we must manage the risk they created for our companies and our clients. Do not use only one company too much. We have to increase the number for our critical business processes, business targets, objectives. Check if too many things depend on one place and write good rules in contracts and check the contracts. Last one is information sharing. I love it a lot because cyber attackers have a very strong and good communication skills. They play billiard and discussing which entity will be the next, but we have not been that lucky for a time. Every company has its own context and do not want to share their business understanding or experience with others. But Dora says you should share. And this is about increasing awareness about cyber risk throughout the sector. If you see something risky, you can share it with others. This helps keep everyone safe. So this part is about working together, not just following rules. These 5 parts of Dora together, I created this slide. They help make digital system very strong, very strong. We cannot provide absolute assurance, but we are increasing acceptable assurance in some strong levels with the Dora. And here, you're seeing another QR code. I love that document. It provides the summary of MiCA with its important requirements, the important aspects. And here I am also providing an internal control. What kind of internal control environment we should have according to MiCA? According to MiCA, CAPS must implement robust internal controls, but how? They should create a strong governance and decision-making process with the help of control environment. Control environment helps us to understand all business processes if we know what are the inputs, what are the outputs, who are responsible of this process, what are the targets, and how these targets, process targets support our business objectives, we can be more secure in understanding and defending our organization. Risk management is another important topic, and compliance functions. And the right side, custody and safeguarding obligations. Client crypto assets must be segregated from company holders. This is a very important issue because before some crypto companies already have some challenging tasks, challenging functions together. And these may create areas, gaps for illicit activities. And MiCA sees this and implements asks some requirements, obligations from the companies to prevent this kind of problems. CAPS also required to implement cold and hot wallet security protocols, ensure business continuity and incident response plans, establish loss reimbursement mechanisms in case of breaches. And this is another slide. First, let's look at market abuse. And this is another issue. Crypto asset service providers must stop things. This is again according to MiCA, like insider trading, price manipulation, and sharing insider information in an illegal way. Also, companies have too much trading behavior and report anything suspicious to regulator. When I was a risk director in a crypto asset service provider in Turkey, this insider threat was our main issue because it has a potential to ruin all your reputation inside your clients' heads. And for transparency, CAPS must give clear and correct information to users. This may include what the crypto asset is, what kind of risk it has, and how pricing and valuation are done. And finally, CAPS must also share regular updates with both regulators and public. Yes. And the relations between MiCA and DORA. Now, first, if we start with their shared objectives, both MiCA and DORA are designed to build trust in the EU's financial system, not only in traditional finance, but also in the crypto ecosystem. They also share the goal of ensuring the safe adoption and effective management of digital assets. So even though they come from different angles, their intention is aligned. Next, let's talk about the differences in scope. MiCA is more focused. It governs crypto assets, stable coins, and other related market activities. DORA, however, is much broader concept scope. It deals with ICT risk management across the entire financial sector, system, ecosystem. So even firms already covered under MiCA still fall under DORA when it comes to digital operational resilience. Finally, in terms of overlap in applicability, crypto asset service provider CAPS that are regulated by MiCA are also expected to comply with DORA's operational resilience requirements. So in effect, both regulations work together to create a more secure and transparent environment for digital assets in the EU. This alignment is important because even you are focused on MiCA, DORA will still applies and must be factored into your risk management and operation planning. And it provides a strong risk management, material level of defense and resilience requirements applicable for crypto asset service providers. And now we'll talk about how can we create a strong, robust, applicable risk management framework. Okay, we don't need to go into all these principles, but please take a photo of them because these are the 7 tenets of a strong, mature risk management function in an organization, not just in CAPS, not just in FinTech. It's also applicable for any other companies. And it's not about being perfect in every area, but about understanding these goals and trying to apply them in the right way for your organization. For example, integrated. All business functions, all business processes should be in the focus of risk management. Customize. You should customize any risk management framework to according to your organization's reality, its culture. It is a way of implementing the business. It's how your organization understand the profit, the client trust, or best available information. It is very rare to find this kind of skill in any organization if they haven't implemented any data governance approach. But we are experiencing this problem If you ask a specific question to a unit, you will have the answer different from the other unit. For example, if you ask how many clients you have, your legal team will answer another information. Your human resource or financial department, sales department, business development department will provide you different information. Best available information is one of our target in risk management, because with the help of risk management process, we are creating a inventory of processes and assets. If you do it in a proper way, you will now have the good, best available information. And this risk management department also check this by in every period and try to increase your capacity in this section. And dynamic, because risk is changing, expectations are changing, customer expectations changing, so it also affects the risk. Technology is changing, as all we know, so this kind of framework should be dynamic. How it can be dynamic? If you can customize it according to your company, yes, it's becoming dynamic. If you check your system, your business model, your understanding, your culture in some period in good frequency, you can update your framework and make it more dynamic. So keep in mind, create a list for your company and check if your company's risk management function satisfy these 7 goals or tenets. And this is, I love it a lot. I have used NIST risk management, enterprise risk management, information security risk management frameworks. I use COSO, enterprise risk management framework. I am one of the experts in COVID in full version. I am ISAC's accredited trainer, by the way, and work with a lot of financial institutions to create a strong information and technology governance environment. Yesterday I worked with one of the financial institutions in Turkey, again in creating enterprise risk management function, and it's my understanding ISO 31000 is the best one. It is very easy to implement, to understand, and with this tiny small diagram, it shows everything related to risk management. When you text in the Google, just text ISO 31000 and risk management, you will also receive a lot of information about this diagram. We first start with risk management, scope, context, criteria, understanding of the company, defining the company's reality. Then we start the risk assessment process. First, we identify the risk. Second, we understand the likelihood and impact of any risk in any business operation, business process. And then we implement a risk evaluation process to understand the criticality level of any and risk item. And it provides us to prioritize all the risks in our company, in business processes. And then we report this to decision makers, and they decide on risk treatment. And then we report this and start to monitor the situation. And it goes this way. But how can we implement this for the crypto sector? First, we should understand our scope and context and criteria. Again, I add some information specific for the crypto sector. We should first understand the context, the reality, custody of scope, custody of digital assets, order execution and matching, client onboarding and AML processes, smart contract usage, and DLT operations. Some specific, like Mike and Dora, legislations for this sector. And context, governance structures, technology stack, data flow, and it goes this way, and some criteria. We already have some criteria to define our risk management functions. For example, specific for blockchain and crypto sector. For example, Class Security Alliance. Let me write you. Wait a second. Yes, because I am now presenting over Canva, and I would love to use Canva pencils. Yes, CSA. Please, guys, if you're really interested in this topic, please check the website of CSA, Class Security Alliance. Class Security Alliance already published some criteria and some frameworks about blockchain and crypto sector. And for example, lastly, it's a few months before it announced a framework named Reality Blockchain Cybersecurity Governance Framework, and I am one of the writers of that framework. You will see my name, and this framework I created all the controls for the blockchain technology for if you want to use a blockchain technology in your company. And I used again NIST, COSO, ISO, and COVID frameworks to define these controls. You may see them. And also ISACA has its own blockchain. ISACA also has its own blockchain standard, and it has 3 standards. One of them is general how to use blockchain in your business. The second one, blockchain and crypto for senior management, and third one, risk management for blockchain. It is marvelous. I love it a lot. And I guess 3 of them are free to download. You can check now in their websites. And this is another thing. If you want to understand the context of crypto, we should also know about the sector of crypto sector. And this is from CoinGecko. CoinGecko is one of the best sites. I love to read their reports, their documentations, articles, and follow the crypto sector. And as you see, market cap recovered strongly, ending the year above is $3 trillion. It's a huge number. At the same time, we have big spikes in trading volume, often triggered by regulations. There are increased legislation over crypto sector. Hacks, as we saw in previous slides, and major launches. Still, a lot of crypto projects are going live. This kind of volatility shows us how fast things can change in crypto so far. So for any organization in this space, understanding the market is key to setting the right risk priorities. This is another source to understand the context. And the technology stake. By the way, as I showed you a newsletter link, every week I am approaching this topic from different angle, and one of the angle was the technology angle, because blockchain and crypto sector uses a new emerging technology in a transformative way, blockchain technology. Now let's break it down. You can also check the photo of this display. It's very useful. It's making it very simple. Admin layer. First, you can think of this as the brain of the exchange. It creates the magic. It manages user accounts, stores client data, handles wallets, and pull accounts. The matching engine lives here too, and it's what matches buy and sell orders, processes transactions, and even connects with decentralized apps. So it's quite critical. Integration layer. This is where the exchange connects with the outside world. It works with different blockchains to execute trades, taps into external liquidity providers, and links with third-party applications and payment systems to make things run smoothly. And it goes with access layer. This is the front door. It's how users interact with the exchange through the website, mobile apps, and APIs. It also includes secure login, mechanisms, and user management tools. For this specific technology, we should have some specific and common controls to create this to create a trust function here. For example, for users and sessions, multi-factor authentication, session control, and anti-phishing protections. For data and transactions, access control, encryption, monitoring, and logging, and it goes this way. You can find these and more in the documentation I describe in CSA website. And this is the techniques you can apply in defining the risk. As we all remember, in the previous slides, let me check it, I show it here. I will go now, back. Yes, here. In risk identification, we should apply some techniques. Now we understand the context. Now we should apply some techniques. What are they? Brainstorming. We come together, discuss about the topic. You can also invite some people from university, people from some consultancy companies, or people with strong understanding about blockchain and crypto sector. We can apply checklists. You can also download this kind of checklist in ISACA or ISACA-like organizations. They already created some crypto-oriented audit and risk management checklists. Process mapping. As risk experts, we are always start with process mapping. We are creating a process and inventories, so it helps us to understand the risk properly. Past incident review. Incident reviews are the best to understand from your failures. SWOT analysis, and it goes this way. You can again take the photo of this presentation and check all of them. These techniques help you to understand your current and emerging risk easily. And this is the one I created again by myself, focusing just into the caps. This is a risk universe. After with implementing this process and these techniques, we create risk portfolio of our organizations. This compliance, financial, strategic, and operational risk approach is taken from COSO. With using COSO approach, I created some high-level crypto-oriented risk, but we should also add more if we go deep in this area. After defining the risk, we should apply risk analysis. And risk analysis is under the risk assessment step. First, we define the likelihood, then impact. When multiply them, we now have the criticality level of any risk. And as you see on the screen, we use now a heat map to prioritize to see the most important critical risk for us. You can apply different kind of scaling. Here we see for the impact side, we have 4 level scaling. For the likelihood side, we have 5 level scaling, but it depends. For example, in my previous company, I applied 5 to 5 scaling. It again depends on your understanding. We are, as a risk expert, trying to make it more clear. If we have sources, you can do more. If you have limited sources, do it as you can. And risk treatment. This is again the same with any other risk management approach, and generally it's accepted globally. We have 4 kind of risk treatment strategies. First, avoid. Second, reduce, transfer, and accept. You can choose, risk experts do not choose the risk treatment. They just suggest to the senior management or the specific or the level who can accept the responsibility about the risk treatment strategies. And then We define the controls, mitigations, assign responsibilities, set timelines, integrate into policies, and monitor, review, and report to senior management about the improvement or maturity or the failures. And for this, we should create, according to DORA, it is taken from DORA's requirements, we should apply again 3 lines of defense model. It specifically tells in DORA, you should take into consideration to use 3 lines of defense. In the first line, business units, we should define, you should create opportunities to discuss with our business units about understanding risk management. We should create a taxonomy for them or for all company units. And we should also, as a risk management department, we should help them to understand the business processes, their expected functionality, and the risk that may affect in the future. And we should also create a constant monitoring functionality to watch, to monitor, and report any failures or any problems to senior management. Here I also add some control types: administrative, technical, or physical controls. Administrative controls are very important in creating risk management culture. And without creating a strong risk management culture, any of others will fail. So pay attention to create first a good policy. That policy which aims to satisfy the expectations of DORA in risk management. Then take buy-in of senior management with making them sign this documentation and publish it to the teams, the business level, and expect them to understand this risk management policy and apply these rules, requirements defined in this policy in their business process. This may increase the capacity of other administrative controls, technical controls, and physical controls. I'm checking the time. And there are also some in the right side, you see 7 components of any organizational system. When you're creating a effective risk management function, you should also consider people skills. You should hire and strong, prominent risk management experts in the crypto sector. Otherwise, it will be very hard for them first understand the technology and implement proper risk management functions. And they should also be trained in this area. As a risk expert, it was very hard for me to understand this technology. It's very new, it's very complicated, and people in this sector generally prefer to stay calm, silent. They do not love to share their information a lot. So you should make a lot of search, and you should be a good observer and understand this. Organizational structure for a strong risk management function, you should connect it or to a strong senior management department. The risk management department should report directly. Even here, it's right. It's the second line of defense. It is better to report to high level senior management. Otherwise, it's not easy for them to understand all the problems, failures, and reporting it directly to the senior management. Of course, if we have internal audit function, it will be more easy for the risk management departments, but if we cannot see these internal audit functions in every crypto companies. Maybe you heard about FTX failures. I read the report of FTX, and the investigation team said that in their report. They haven't, in the beginning of that report, they claim they haven't seen before such a failure because of efficient risk management department. This risk management department's failures created an environment to go for the FinTech side to cause a lot of problems for the organization, because risk management functions monitor in high level all business units and senior management and provide them insights about the problems or compliance issues, emerging compliance technology issues. And without a strong risk management department, organizations or senior management may not see the reality or may neglect the control failures. And here we can use these four framework for creating this kind of effective risk management function in organization. ISO 31000 risk management is the best. It's good, very good, but it will be not enough because it describes how to create a strong risk management function. However, when you start to define the risk, you will see you will encounter with technology problems. So it is not providing any guidance in this, or you'll face with cybersecurity special, very sector-focused cybersecurity problems. You will not able to find any solution in 31,000. So you have to go to NIST documentation. NIST risk management framework is good, and NIST also have cybersecurity frameworks. NIST have some security frameworks specific for the blockchain, for the crypto asset. COSO also created with the help of Deloitte. You can also find it. If you Google, you will find it. And COSO created a blockchain and crypto sector oriented enterprise risk management framework. You can also download and check it. It will provide an understanding about the control environment of these or specific organizations. But my best is COBIT, because the latest version, general people, experts know COBIT as the framework about the controls. No, the latest version provides you a digital transformation guidelines, digital transformation strategy. If you can apply the latest version of COBIT, for example, design and implementation framework, COBIT helps to understand first, to help you to understand organization's information and technology objectives. I applied COBIT to my previous company, and we sat with senior management, assurance teams, legal teams together and spent some time to apply design process of COBIT and define the business objectives and information technology objectives of the crypto sector company. And then we help of another COBIT frameworks, we created an actionable plan to increase our risk management maturity level and information technology governance level with the COBIT itself. So you can also use COBIT. By the way, I guess 3 months before, I wrote a paper for ISACA Global, and they published it. COBIT for custody services. You can check in internet and read it. I'm sure it will help you a lot. If you have any other question, please do not hesitate to reach me through LinkedIn. I try my best to help you, because I believe this crypto sector needs you a lot, needs you more than any other sector. These people are very genius. Well, 2 weeks before, I moderated a session with global pioneers of crypto sector in Istanbul, and these guys were speaking about AI, how AI intersect with blockchain, how digital trust can be implemented in digital blockchain crypto sector. They know technology well, they know the client's expectations, they know business well, but they have a problem. They are very limited understanding about risk and cybersecurity issues. But this is your work, and I am aiming to explain these topics in every occasion. I believe because this is a good area, this is a good career for risk management, internal control, cybersecurity, and information technology governance experts. I guess my presentation ends here. And digital trust is the aim of DORA, MICA, NIS2, EU Data Governance Act, all have a objective of digital trust, and all support this objective, try to support this objective. And it's my understanding again, Web3 ecosystem is the most applicable area for the digital trust approaches. If you have any questions, please don't hesitate to write me, or thank you for listening. I guess we are ending now. It's the CFA. Thank you for CFA, and thank you for listening me. I hope it helps you to figure out more about this sector. By the way, I forgot, if you want to have a paper certification for this event, you should fill the form link in the chat area. And this is the last one.